Imagine Japan's economic journey as a delicate and intricate process, like assembling a traditional Japanese tea ceremony. Every step is deliberate, every motion precise. Over the past decade, Japan's corporate landscape has undergone a quiet revolution, one driven by governance reforms that began when Abe Shinzo took office in 2012. Like the careful brewing of tea, Japan's government and companies began shedding old, value destroying practices, which in turn has revitalized their once stagnant economy. However, much like a half finished tea ceremony, there is a sense that the process has paused too soon, leaving much to be desired. Now, picture this transformation as a pie chart, one shaped like Japan's iconic red and white flag. Corporate Japan has become friendlier to shareholders, with the pieces of the pie representing a surge in mergers, investor activism, and record breaking share buybacks. In 2023 alone, Japanese firms pledged over Y12 trillion, $85 billion in stock repurchases, and global investors like Warren Buffett have taken note, buying into these undervalued Japanese conglomerates. It's as if, after years of hesitation, international players finally tasted the first fruits of Japan's reforms and found them sweet. But here's where the story takes a twist, because while the pie is being shared, Japan's leaders are acting like the ceremony is complete. They've begun to pass the responsibilities of reform to bureaucrats and technocrats, assuming that the hard work is done. The problem is that it's only half done. Japan Inc.'s corporate valuations tell the true story. The price-to-book ratios of Japan's listed firms sit at a meager 1.5, far below the lofty heights of their American counterparts, whose companies are valued at 5 times their assets. It's a clear sign that Japan's leaders are resting on their laurels. Meanwhile, companies are hoarding cash. Non-financial firms are holding a staggering Y372 trillion, $2.6 trillion in cash and bank deposits, up 82% since the end of 2012. This is like a tea ceremony where the host has left much of the tea unpoured, holding back when there's still so much to offer. Yet, the path forward is clear, and it doesn't require drastic measures. Nicholas Beans, one of the architects of Japan's recent reforms, has proposed simple yet effective changes. By training corporate directors in finance and law and making corporate documents machine readable, Japan could unlock the potential of its companies without breaking a sweat. Imagine adding just a few more steps to the ceremony to ensure that the tea is shared with everyone in the room. But not all changes will be so easy. More controversial steps will involve selling beloved Japanese firms to overseas buyers who may manage them more efficiently. Think of Alimentation Couche-Tard, the Canadian retail giant that has tried to acquire 7&I Holdings, the company behind the 7-Eleven convenience stores. While the initial $38.5 billion offer was rejected, the fact remains that for Japan to thrive, it must be open to such deals. The reality is that some companies will need to downsize, abandoning less productive investments in Japan itself. Toshiba and Omron, for instance, have already announced layoffs in the thousands. This part of the story is uncomfortable and requires careful management, but it's necessary to keep the tea ceremony moving forward. Unfortunately, Japan's politicians have shown little appetite for this. They lack the zeal of the Abe years. And if they don't take action, Japan risks falling back into stagnation. For now, the impetus for change comes not from politicians, but from the Tokyo Stock Exchange and government agencies like the Financial Services Agency. These institutions are pushing companies to raise their valuations and meet higher governance standards. However, the silence from Japan's Liberal Democratic Party is deafening. Without political leadership, there's little hope for the broader reforms Japan needs, such as making its labour market more flexible. And here's why that's so crucial. Japan is the oldest large nation in the world, with 30% of its population aged 65 and over. The country faces rising security threats from China, and in response, Japan increased its defense spending by 27% last year and is set to boost it by another 17% this year. A strong economy is vital to pay for these growing costs. The tea ceremony, in this case, is not just about tradition, it's about survival. In the end, Japan's business revolution is far from over. The tea has been brewed, but it must still be poured, and the cups must be refilled. Japan's leaders must step up, ensuring the country's economic future is as meticulously cared for as its most cherished traditions. Only then can Japan fully enjoy the benefits of the transformation it started a decade ago.